Far East dealers in crypto assets have been on the receiving end of severe regulation, and yet the region appears undaunted. At least, that's if the Token 2049 Hong Kong conference is any indication. Indeed, at day one of the event Tuesday, there wasn't much evidence of the so-called crypto winter being mooted in the West. In fact, China's tokenomics movement appears to be in good health, even with the outright ban on ICOs and trading on exchanges. That's not to say that the market hasn't been affected, though. On the contrary, one of the big concerns the Chinese government had about ICOs to begin with was the ease with which crypto tokens might facilitate money laundering, and since the ban, there's been a lot of underground, modified ICO activity in China, said Jack Liu, founder and CEO of Wanchain. It may have increased tenfold since the ban, he said. According to Liu, the result is that China now has a credibility crisis. While the government recognizes that blockchain technology in some form or other could provide a solution, it is left with a proliferation of the very activity it intended to stamp out. How all this plays out is anyone's guess. But blockchain technology in the form of private, tokenless deployments is welcome in China, said Liu, whose firm is working on interoperability between such networks. Then there's the large amount of money and effort that Baidu, Alibaba and Tencent have channeled into the blockchain space. Liu even went so far as to mull a future where the two trends might have come to a head. He asked, then there is traditional enterprise, private blockchain space, will the two cross over and come together at some point, pump and dump elsewhere? A panel entitled, Post-ICO. The Future of Venture Capital took a brazen look at the more unique dynamics of the crypto investing universe, namely, how investors manage active portfolios that influence the public market. Peter Vesanies, former founder of the Bitcoin Foundation and managing director at New Alchemy, which only invests in tokens, talked about the immediate liquidity in crypto markets, as opposed to VC investments. There are a maximum number of trades a VC can do, said Vesanies, adding that his firm takes positions, but that trading in and out of tokens was something portfolio firms have shown a greater preference for. Paul Varadidakit, partner at Pantera Capital, said his firm's policy was generally to buy and hold, stating, we do trade, say if something has gone up like 1000x, we will take some off the table. Details were also provided on each firm's strategy. David Chang, managing partner at MindWorks Ventures, for example, said his maximum exposure to tokens would be between 10 to 15%, with an average investment horizon of about 7 years. However, Jason Fang, managing partner, Sora Ventures, said it depends on the jurisdiction. Chinese deals are very different from US deals, he said, which tend to be longer term. China, you try and get the best deal, and when it's listed you just dump it. If you don't dump it, someone else will dump it, he said, speaking again to the region's gray market dynamic. Turning Japanese, but if China was the focus for much of the day, talks also focused on a very different narrative in Japan. Mike Kayamori, CEO at Quan, the exchange group and regulated ICO platform, was perhaps most vocal in speaking to the country's vibrant crypto economy, prior to holding his own ICO, with $105 million raised in November last year. Kayamori claims he sat down with Japan's watchdog, the FSA, in what was a collaborative engagement. What China has banned, Japan has embraced, said Kayamori. Since regulation was passed that enables token issuers and exchanges to receive official licenses, there have been 90+ applicants waiting to register, he said. However, he noted that gaining a license involves KYC, AML checks, segregation of customers' assets and employing an independent auditor. And Japan is not without its growing pains. All 90 applicants have been put on hold for the foreseeable future, as the Japanese government deals with the blowback of January's Coincheck hack, Kayamori noted. Mt. Gox in 2014 and now Coincheck in 2018. Despite all these guidelines, this happened again. But I do think it's all temporary, said Kayamori, hinting at his belief the market is likely to bounce back. He predicted, I think by June, the government will loosen up again. Image via Ian Ellison for CoinDesk, the leader in blockchain news. CoinDesk is a media outlet that strives for the highest journalistic standards and abides by a strict set of editorial policies. CoinDesk is an independent operating subsidiary of Digital Currency Group, which invests in cryptocurrencies and blockchain startups. Disclaimer: this article should not be taken as, and is not intended to provide, investment advice. Please conduct your own thorough research before investing in any cryptocurrency.